My guest market monitor this week is Mark Leibovit, Chief Market Strategist for VRTrader.com. Welcome back to NBR, Mark. Good to have you.
Thanks, Paul.
Given the stock market's massive recent decline, do your technical indicators show signs that prices are close to bottoming out?
Not at all. We're still in a bear market. I don't think until home prices turn up and until financial stocks show some life can we really call for a meaningful bottom. In fact, in our volume reversal analysis, we have a projection out of 6,500, and we could get lower ones.
Wow.
My thought, that said, Paul, is that when President Obama comes in, there's usually this 100-day honeymoon period, and markets tend to do a little bit better. So come next year, we might see a nice technical rally, but it could come from lower levels.
Let's look at your Dow forecast for the year 2008. We have it up. The chart is there. You made it, the forecast earlier in the year, in January. And there it was. You were pretty accurate in calling this recent decline, but not as severe as it turned out to be, right?
Yeah, it was a little early calling for low towards September, but basically the pattern was bear, and now it's showing the possibility of some type of recovery, but I'm waiting for the other technicals to confirm before we start becoming bulls.
What investment strategy are you using in this highly volatile market environment?
Well, basically, we're trading the market. You know, the volatility we've had, Paul, 1,000-point swings every day or two. I don't know how you can call yourself an investor. If investors are uncertain, they just stay in cash and wait till the trend decidedly turns up. But as a bear, I would short the rallies or buy inverse ETFs.
Okay. Now, you've been a very strong proponent of owning gold investments, and although the precious yellow shot up sharply today, why hasn't it done better as a safe haven for investors?
Well, I think there's been some artificial moves here, deleveraging by hedge funds, margin calls. There's a big discrepancy between the physical market and the paper market. It's almost impossible to buy coins and bars. There's hoarding going on out there. Basically, I think it's a function of the dollar had been strong. But interestingly, today, the dollar broke out to new highs, and gold was really strong. And I think that's very positive. Plus, we got above the 775 resistance level, which says we might be headed next to 800, 850.
Let's look at your gold forecast for 2008 made back in January. And there it was that summer dip, which we had, and now it's starting to rally again.
You know, we can come in on a Tuesday morning, Paul. It could be this coming Tuesday, and gold could be up $500 an ounce. I think if we can break through 8,850, we're headed to 1,200, then ultimately to my big targets. So if it doesn't happen now, I would say accumulate the gold because this is your ultimate hedge. Gold will not go to zero. We've seen Fannie Mae go to zero, and we can name a bunch of other stocks, but gold will not go to zero. That's your ultimate hedge.
You're sticking by your forecast for over 3,000 long term.
Yes, I think there's going to be some pegging of gold to currencies like we saw in the Bretton Woods Agreement back in the 40s. It's coming. I can't obviously pinpoint the time.
All right. Your target price for silver was $50 per ounce. Are you still with that?
I think so, but given time, yes, you'll see that take off as well. There's also talk that there's not enough physical silver for delivery at the COMEX. If that is really true, we could really take off. We're
down to 1 minute. Let's look at your April visit recommendations and how they've done since that time. Spider Gold, the Gold Trust down about 13%, 46% drop in Silver Trust. Are you still with them?
Yes, I think this is, again, a function of the artificial deleveraging in the market, and this is temporary.
And Pan Am Silver stock down 68%. Do you still like it?
Yeah, I got to buy it down here. You can't be selling it down here. I like the physical metal better, but let's go for the shares as well.
30 seconds. A new recommendation or two?
Well, one I'm going to add is the CEF, which is the Canadian Central Fund of Canada, that is. This has no third-party risk or counterparty risk like ETFs, like the GLD and the SLV. I would buy CEF because it combines silver and gold.
Do you personally own any of these securities mentioned or have other disclosures?
Yes, I do own these securities.
Our time is up, but I want to thank you for sharing your views with us once again.
Thank you, Paul.
My guest, Mark Leibovit of VRTrader.com.